Sun International, owner of Sun City, Grand West and the Table Bay Hotel, reported an increase in headline earnings despite the country's economic headwinds and energy crisis. Sunbet generated record income during the period and is ahead of its growth targets. For more on the numbers, Sun International CEO Anthony Leeming joins us live. Anthony, thank you so much for your time. So let's unpack the drivers for this particular period.
Good afternoon, Sasha. Yeah, it's been a difficult period, but we've had some really good standout performance, particularly from Sunbet and our hotels and resorts. I think we've seen a bounce back, especially in the local leisure market, and it really has come through strongly at Sun City. Conferencing has been good, and then international market into Cape Town has been fantastic. But when I look at Sunbet, I think the move to online is certainly paying off. We've pushed our business very hard. We still have a lot of room to grow, and we're meeting some very, very aggressive targets. So very happy with Sunbet that has recorded over 100% growth in revenue.
The one thing that struck me in your results presentation, you talk about how the gaming market grew for the third consecutive year. What's underpinning that growth?
It really is the online expansion. So I guess it's a new form of gaming. It's obviously attracting new customers. So if you look at the longer term, the last of 12, 13 years, the online is definitely the fastest growing in this sector of the industry. So that casino incomes are holding up and proving to be resilient, as are the LPMs. But we are seeing the online expansion with allowing the casino games, casino-style games online, has really pushed the growth in gaming.
The one thing you also mentioned is the Sun Slots side of the business being impacted by load shedding, and as a result, income is coming in slightly behind what you would have expected, rather. What are some of the levers that are in your control here when it comes to renewable energy and that strategy to basically protect margins?
Yeah, look, I think renewable energy on the LPM business is a little bit different because we've got hundreds of thousands of outlets where these LPMs are located. And we are helping site owners. But when you look at the bigger group, we've had a solar installation at Sun City, 1.4 megawatts, and we're busy with a solar installation at Sabaya and Carnival City. And we're also working with Discovery Green on a wheeling solution for the larger group down the line. So a lot happening. We're investigating the Wild Coast as well, where given the size of the resort, when it goes down electricity, it needs to use a lot of diesel. So we are on top of it and really working pretty hard in finding solutions.
I want to come back to the comments you made around Sun City, and perhaps we can unpack here in terms of the leisure and business demand that you're seeing when it comes to your resorts and hotels.
Well, I think, Sun City is really an ideal destination for any larger conference and even smaller conference. It's a really contained resort and proven to be very popular. I think local leisure people are seeing the value. We've had to spend a lot of time on getting the product right. So I think the service is better, the offering is better, the product is better. We put money into the Palace. We're going to be doing the main hotel as well. So it's been a big shift. If you go back to 2017, we're doing only a little bit more revenue, but a lot more cash flow. And the honest truth is the service, the offering, the product is in better shape than ever. So we are looking for Sun City to turn the corner and really contribute meaningfully to the group. It's done so this year. It's a record EBITDA for Sun City, and we expect that to continue.
Regarding your Piermont transaction, it's received board approval, which is great. You're just waiting for, the green light from the competition authorities. Do you see them giving you that particular green light? I'm sure you would have, researched the competition aspects here in detail before making this play.
That's exactly it. We did a lot of work on the competition aspects, particularly between Times Square, Carnival, and Empress. And we don't think they're significant, and we got that done by third parties, so it's not ourselves. I mean, we haven't even seen the output from those surveys because clearly it would be anti-competitive to do so. So we don't see that there's significant overlap, and that's reported by a third party. So for that reason, it really should be approved without any real competition challenges or problems.
From a CEO perspective, what's the financing environment like?
It's actually pretty good. I think, we've proven ourselves to be a really resilient company, generating very good cash flows. And the banks are very, very keen to fund us and work with us. So we've had good relationships over many, many years. And therefore, I think it's very good at this point in time. They need quality assets. And we see ourselves in our business, given the cash generation we've had over the last number of years, the recovery from COVID, the banks are really very comfortable. We're sitting currently below 2 times debt to EBITDA. We're paying out significant dividends. And I think the banks are really our partners, are good partners of ours over a long period of time.
As we wrap up, what's the key focus or priority areas for you and the team?
Well, I think the big thing is going to be the integration of Piermont towards the end of the year. And then on top of that, the online growth strategy, we're pushing really hard. We will be looking at some African markets, but that's a slower growth, what we want. But certainly the local market, online growth, we got some aggressive targets for the next 5 years, and we believe we can achieve them. So really pushing hard at that side of business, as well as hotels and resorts, which we think there's further upside.
All right, Anthony, thank you so much for your time. That is Anthony Leeming, who is the CEO of Sun International, unpacking this particular period's results, where we saw headline earnings increase, and that share price was up about 1.7% a little bit earlier on. We're going to take a quick break. When we come back, we'll have a look at your market side of things. Stay tuned. In market news now, Asian shares firmed as Chinese data surprised on the upside for once, while investors looked to navigate a minefield of central bank meetings this week. Central banks in the US, Japan, UK, Switzerland, Turkey, Brazil, and Mexico all meet this week. And while many are expected to hold steady, there is plenty of scope for surprises. Locally, private higher education group Stadio has reported a 27% increase in profit due to good growth in new student numbers. The board announced it had approved the construction of the Stadio Durbanville campus. The construction will be funded 50% through cash and 50% through long-term debt. To give us perspective on the markets, we are joined by Gary Boyson, who is from Rand Swiss. Gary, thank you so much for your time. Let's talk about market sentiment right now and what's driving that.
Yeah, I think you really hit the nail on the head there. It's the idea that these rate cuts just aren't coming. Inflation came in a little hotter last week. Growth was a little cooler than the market expected, and now we have a raft of central banking announcements this week. So it all comes down to interest rates as usual. But I think this week is going to be particularly heavy. So you get the sense that the markets are just treading water at the moment. Good Chinese numbers are great, but the resource index is still down almost 1%. The top 40 index down around half. Industrial is the only bright spot in the market, and it really, I suppose, it's the corporate announcements that are lifting the market today. So we had a lot of news out. We've had JSE earnings, we've had Outsurance earnings, we've had Sun International, Tugela. All the companies are actually looking pretty good after the earnings. The only company sliding on a trading statement, a voluntary trading statement, was Discovery, who came in and said that their earnings would essentially be flat, and that voluntary trading statement not being received too well, sending the stock down around 2%. Also, I get the sense that there are some nerves just coming through from a slightly higher oil price. Brent crude back above $85 a barrel, and that's also just feeding into these inflation expectations. And I think traders are a little bit nervous.
Let's talk about those earnings. I mean, I was quite overwhelmed this morning, trying to decide what to look at and why, but you eventually get through it. But let's talk about one or two companies that caught your attention and why that was.
Well, I think we can look at Tugela. It's a spin-out of Anglo American. Headline earnings down around 73%, so an absolute collapse. But the stock up almost 5% on the back of that. Now, why is that? It's because Tugela has decided to do a share buyback of around 500 million rand, and they're also paying a 10 rand dividend. So I think a lot of the slide in earnings, it's more to do with the slide in thermal coal prices. Obviously, we saw that huge spike up, when European energy security was at stake and thermal coal prices going berserk, and suddenly you had Tugela as the beneficiary. The stock is down around probably 43% year to date. So it is a recovery from lows, but the market looking at those results thinking it's not so bad. I think also a little bit more optimistic that the Transnet freight rail actually, yes, it was a decline, but maybe not as bad as people were thinking. So that stock up nicely on the day. I suppose Sun International is another interesting one to have a look at. So Sun International headline earnings looking a lot better as well. Revenue, coming off a lower base, but up to 12 billion for the year. And again, kind of highlighting the issues that we're seeing, with a lot of the companies listed on, and operating in the local environment. And that's, highlighting load shedding, saying that is a challenge for it. It does increase the costs, but the dividend's still up almost 7%. And really a lot of growth coming through from Sunbet, their online sports brand. So also looking very decent, and the gaming certainly starting to lift, which if you compare it to something like City Lodge, share price recovery from the very difficult time that we saw in some of the leisure and hotel groups, looking a lot better than COVID times, and the share price recovering nicely. That stock also up around 2% on the announcement.
I want to touch on the central banks because tomorrow we're expecting announcements out of the Bank of Japan. They're announcing their interest rate decision. And for some reason, markets seem to believe that, they might walk away from this 8 years of negative interest rates. If that does happen, what's the impact on global and FX markets?
Well, I think that's the base case at the moment. Everyone is expecting them to go to zero. So I think that overwhelmingly we're expecting, not overwhelmingly, I think there's about a 60 to 70% chance that we'll see that 10 basis point lift, so 0.1% lift, and that will take them, as you say, to flat. So they'll be out of the negative territory. And I think this will just be it'll finally be a return to more normal monetary policy after what they called their QQE, so the quantitative and qualitative easing. That they started back in 2013. So what the impact will be, it's very, very difficult to tell. I think this has been well telegraphed to the market. The Japanese finance minister has actually cut spending within the economy to prepare for this. Japan is an incredibly indebted economy, but from a market impact, you would expect banking stocks in Japan to profit. Mortgage lenders, specifically Japanese exporters that rely on the yen to probably suffer in if we do see the yen strengthening. But again, it's difficult to tell what the underlying impact is going to be, because I think this has been fairly well telegraphed to the market. I think, it's also a very small move. Central bankers are incredibly careful people, and these moves are going to be very, very gradual, and they're going to assess market reaction as they go. So I think the lifting interest rates might be less of an impact than a lot of people are expecting. But in a higher interest rate environment, you would expect capital losses. When you hike interest rates, it does put pressure on equities. It will put pressure on Japanese bonds as well. So you would expect that, but the question is how much of that is already priced in, and that is a very difficult question.
As we wrap up with a few seconds to go, is there a reasonable risk that the Fed will not cut this year?
It's a good question. So at the moment, if you look at Fed funds futures, there's a 1.2% chance that they won't cut by the December meeting. So very, very slim chance that we don't get a rate cut from the Fed. But that said, it's a good question, because the trend has certainly been to push these rate cuts out further and further. If you look at the expectations from the markets, let's say coming into the year, we were expecting rate cuts by March. And there's now a 99% chance, according to the Fed funds futures, that there will be no cut on Wednesday. So definitely should be cutting, but it's all data dependent. What does Jerome Powell always say?
All right, Brett. Thank you so much for your time. That is Gary Boyson from Rand Swiss. And as he mentioned, it's all data dependent. So we'll see what happens as the months unfold. We're going to take a quick break. When we come back, we'll have more news for you.